there, this is Sandra Lastovic with the Mortgage Center in beautiful downtown Guelph, Ontario. Another Mortgage Monday. And this month, for the month of January, we're doing a theme around getting your financial house in order. The question that I've often had is, should I pay a penalty to break my mortgage and pay out my debts? Well, a couple of things to keep in mind. My general rule of thumb is if you're not paying your debts off every month, you may want to consider doing it. And when I say debts, I mean credit cards and lines of credit debt. If you find yourself in a situation where you've accumulated some debts and you're not paying them off, and you're in sort of the middle of a 5-year fixed or variable rate term, it may not make sense to change mortgage lenders and pay a penalty. So as a mortgage broker, we actually do mortgages for most of the chartered banks like TD or Scotia, and we can kind of run a scenario for you even if you didn't come to us in the first place. I know banks are often make their money based on the interest that you pay, so it's our job, and we can provide you with some good unbiased advice on how to consolidate the debt that you currently have into the mortgage that you currently have to avoid a penalty. Sometimes it makes sense to actually pay the penalty on the mortgage. For example, if the interest rate on your mortgage is currently more than like 3.39 or 3.59% on a 5-year fixed, or if you're in a variable rate mortgage and you're worried about interest rates climbing and what that would do to your monthly cash flow, then paying a small penalty, putting the penalty into the mortgage, and then looking at consolidating some of your debt probably makes sense. One of the things that we've often done just to kind of keep you on track is if you're consolidating your debt and you're getting a lower interest rate and you're paying a penalty, we want to try to keep you on a short amortization just to be true to yourself so that you can continue to pay down your debt. The other thing is budgeting. It's not a sexy word, but if you have a simple budget, and we can help you with that, like 5 to 8 lines, just some of your main expenses, that also helps. Some of the things that you can also do to help you get your financial house in order is ensure that you're paying your mortgage as you get paid. So if you get paid on a bi-weekly basis, pay your mortgage bi-weekly. If you get paid on a monthly basis, maybe it would make sense to pay your mortgage on a monthly basis. Also, we recommend pre-authorized pre-authorized payments for your property taxes just to help you with staying on track and keeping your financial house in order. The other thing that I always like to recommend just to kind of get your financial house in order is if that you're a sole proprietor and you're self-employed, ensure that every time income comes into the business that you take 20% of that and pay CRA right away, because you don't want to be left with a large bill at the end of the year for CRA, because that gets you into further debt. The final thing, which I think most people overlook, is probably about 15 years ago, David Chilton wrote a really great book called The Wealthy Barber, and he actually coined the term pay yourself first. So I am not naturally a great saver. So what I actually do is I set aside a savings plan and I pay it like a bill. So a portion of my income goes every sort of on a I get paid monthly to my savings. So these are just some quick tips on how to get your financial house in order. If you own a house and have a mortgage and want to kind of rejig your liabilities, please give us a call. Check us out at skipthebank.ca. Signing off for another Mortgage Monday.